In this video, we will talk about Globalstar, its recent price movements, my opinions about the company, and if I think you should buy its shares. Before today's video begins, if you like my analysis videos, please like, comment, and subscribe to my channel. Over the past few days, the stock price of Globalstar increased from just 34 cents to $1.37. Before retracting back to $1.04. The stock seems to be going through a price correction after a peak, but has managed to hold to the $1 level so far. This would suggest that the support is currently at the $1 level and that the company should have enough demand to push the price even higher. As it is often the case with penny stocks, the initial price increase attracted a great number of investors who wish to catch the gravy train that will hopefully make them handsome profits. There are several questions investors should ask themselves, such as what are the immediate and future catalysts for this company? What does it exactly do? And if it is a company to speculate on or rather to invest in? In this video, I will try to answer all these questions with my own analysis. So, in terms of catalysts, the immediate catalysts are the partnerships reached with BattleBox and Nokia. Globalstar equipment will be shipped along the boxes sold by BattleBox, and there is a deal with Nokia consisting of deploying its equipment in American cities such as Seattle. The long-term catalysts that investors identified are the projected demand for reliable connections in remote or hostile work environments and the new administration's focus. So, with the new administration coming in, the focus seems to be aiming at developing the Internet of Things as well as alternative energy sources. Both of those objectives go in the sense of Globalstar, in the sense that they both require more reliable and better internet connections in order to coordinate team efforts and to ensure timely feedback between people at different locations. Globalstar is a provider of satellite-based communication systems. It has been operating since the 90s and has since then been a reliable provider of those communication services. The company owns and operates a number of low-orbit satellites that will then directly receive and transfer internet signals to users, regardless where they may be on the planet, and if the location they are at has phone or internet coverage. With all that being said, let's take a deeper look at the company itself. It is one thing to list all the promising aspects of Globalstar, but it may also be another to determine if those promising outlooks are going to be monetized or realized. When we look at the financial statements, it seems like Globalstar is very far from achieving a break-even point, despite the fact that it has been operating since the 90s. The possible reasons for this deficit may include high operating expenses with the satellites, but also because there may be less interest from the potential clients we just listed above. There is the argument that things will be better for the company as economies reopen and things returning to normal. But the deficit that we currently see seems structural, and the company needs to increase its revenue by almost 50% from the current levels in order to balance its operating expenses. Some may argue that a significant portion of the expense is non-cash, booked in depreciation. However, in the case of Globalstar, because it relies on using advanced equipment, including satellites, in order to serve its clients, I think that this depreciation cost should correspond to what they will eventually have to spend when those satellites need to be replaced. We can also see that the company is taking on more current liabilities from 2019 to 2020, especially considering that $45 million of maturing long-term debt will soon be payable. Those two elements combined mean that the company may have to sell more shares in the near future in order to pay the debt and to fill the gap left by the operating losses. The other issue that I see is the demand side. Over the years, I have heard that sometimes witnessed the extent companies are willing to cut corners in order to keep the expense down, even when they are not supposed to do so. Back in 2008, there were energy plants that were supposed to install industry-level IT equipment to make sure that the information is transferred in a timely manner and to prevent any significant loss incurred by a breakdown of communication. Under normal circumstances, this should be a mission-critical equipment and quality must be prioritized over cost. However, instead of hiring professional IT contractors to install industry-level equipment, those companies decided to ask one of its clerks to buy some D-Link routers from Best Buy and to be done with it. Another example is the fishing boats that go fishing and come back after a long period of time, probably between 12 and 24 months. You may think that the company really wants to keep an eye on the ship and the safety of the personnel, so they want to make sure that the communication is of top quality and always reliable. Except in reality, those fishing boats very often employ seamen who are simply trapped on the ship, and that the safety of the equipment is guaranteed by the fact that they have the incentive to maintain the ship and to repair any damage as soon as possible, because their salary is paid on the condition that everything goes well during the entire period of 12 to 24 months. If they are using sub-quality comm systems, they can always go to a nearby port and contact the company on the coast. The ship, equipment, and even the personnel safety have already been priced in a budget, so that if the entire team has turned pirates, let's say, or the ship has been sunk to the bottom of the ocean, the company is still financially protected from those events. The last thing they want is to install decent and expensive systems on their ships, piloted by people perceived largely as expendables. To summarize, I think that Globalstar is a well-established company that services an area that seems promising in the current market trends, and that it will please the investors when they read about the company through a computer screen and trading the shares to other investors using similar platforms and reading similar articles. I do, however, caution against the assumption that this will necessarily become the truth. Indeed, it would be difficult for an investment advisor to bring up the fact that companies often choose to save money at places they're not supposed to do so, and that the danger, exploitation, and rundown equipment are often priced in many companies' business models. With that being said, I believe that Globalstar can be an interesting company to buy if the intention is to trade the swings and lock in the profits. If you want to hold the stock for the long term, then the allocation for holding should be structured to make sure that the cost basis is low. My recommendation is to buy the stock with 60% of the allocation bought now and 40% after price corrections. A good price target would be 40% from the cost basis. Because the stock is a penny stock, I would recommend the maximum allocation to be limited below 1% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.